Hello there. Welcome to grade 11 accounting. In this video, we want to look at the preparation of the income statement. So we've got the income statement of Scarlet Traders, and the question reads that the following information relates to the financial year ended 30 June 2019. And on the required part, we are given 2.1, which reads complete the income statement, which has got 41 marks. So that's the part that we are going to do according to this video. So all the information part, we are given an extract, which is information A, an extract from pre-adjustment trial balance on 30 June 2019. So this we have got the balance sheet account section that you need to go through all the list of balances, and also we have a nominal account section which you need to go through. So beneath the list of balances, we are also given information B, which is additional information and adjustments. We also need to go from information, additional information now A, and going down to additional information. You see that on the next page, we are starting from C, going down to K. And you see that this is at the end of the information part in the end of the question, and the question has got 50 marks. So very important. So from that now, we can now go to the answer section and try to see the spaces that were given according to the answer book. So this is the income statement and balance sheet note, and we are not going to be concentrated on that. We are only going to concentrate on Scarlet Traders income statement. So income statement for the year ended 30 June 2019. So this is our layout that we are given in the answer book. So we are going to start obviously with sales here. Then we can now go to our trade formation and then list of balances. We can start from the list of balances by checking the figure for sales that we have and see if we've got any adjustment that is going to affect our sales, and then we adjust accordingly. So if you don't have any adjustments, you can take the figure that we are given in the list of balances as it is and put it there. So obviously on the nominal account section, we've got our sales, which is represented as 1,737,750. But in brackets, they're saying including 75% markup. So what does it mean? It means the markup is inside the 1,737,750, which is no problem. Remember, when we say our cost price plus our markup, we get our selling price. So markup has to be inside our sales figure. So the markup is going to assist us in finding the figure for cost of sales. You can see that the figure for cost of sales is a question mark, which means we are going to find it there by using the information that we are given on sales. So we are going to check in the additional information if we've got anything that is affecting our sales, and then we can adjust. If we don't have, we can check the figure as it is. But also you can check in the list of balances if we have got any returns or data allowances that are going to reduce the figure for sales again. But if you look in our question, we are not having such in terms of sales returns or data allowances. We don't have that in them in our question. So, but if you go to additional information, and A, you would see that it reads goods retained by data B Johnson 3,500 rands, cost price of 2,000 rands were placed back to the shelves. The transaction was not recorded. It means we have got returns that took place. Whenever we have returns, we are supposed to subtract them from the figure of sales at selling price. That is at 3,500, which is the selling price. So we subtract them. Then at cost price, we are supposed to adjust at cost price, other cost of sales. But when we are given as an error like this in the additional information, it means when we are going to find our figure for cost of sales using the figure for sales. So we have already corrected that. So we are not going to correct it again. So what we are trying to say is we can start by subtracting 3,500 from the figure for sales that we have there, which is 1,737,750 on the other section. So we can go to the other section and see what we can do there. Now we are saying under sales. Yeah, we are going to say 1 million in brackets 737,750, and then we subtract your 3,500, and then the answer that you are supposed to get there is 1,734,250. And then for cost of sales, we are going to the list of balance again, but if you remember very well, we are given it as a question mark. So it means we are going to calculate it. We are given here as a question mark. So we can be able to find it given the information that we are given other sales. We are told that the markup is 75%. So basically, what does it mean? Remember the formula that says our cost price plus our markup will give you your selling price. So the selling price becomes the sales figure that you are given there. When you say cost price, it's always 100%. So you're saying 100%. You add the markup. A markup according to the question is 75%. You add the two, you get 175%. So representation of our sale price is 175%. So we come here. So what we are trying to say is 175% is equal to the figure for sales that we are given there, which is 1,750,750. But this one was before it was corrected. Then we take the figure after the correction. So the figure after the correction is the figure that we calculated. The figure after the correction, the figure that we calculated in the other section, which is this one, 1,734,200. So this is the representation of 175%. So we go there. We say the sale price is being represented by 1,734,250. And then the figure that we are looking for is the cost of sales, which is represented by the cost price. So this is the question mark figure that we want. So we can use simple proportion, whereby we are saying what we don't have becomes our numerator, which is 100%. What we have is 175%. We calculate by the given figure, which is 1,734,250. So we calculate it as such. I would say that the answer that we are going to get there is supposed to be 991,000. So we just go there and summarize the working that we did there for the other section. So we come here. We say other cost of sales. In brackets, we can just maybe try to summarize that. Remember, we said 100 over 175. So we're saying 100 over 175. And then we multiply it by 1,734,250. This is exactly, and then we got 991,000. As simple as that. Therefore, our gross profit, obviously, our cost of sales is we might subtract it. We can put it in brackets so that we subtract it there by me saying 1,734,250, subtract 991,000. So the figure for gross profit that you're supposed to find there is 743,250. Then we go to the operating income section, whereby we are going to list all the operating incomes that we have there under this, and then total will come here. So we can go to the question and try to identify the operating income that we have in the question. We go to the list of balances and say we have got our rent income, which is 81,792. This is one of the incomes. But you know that we don't have to take the figures. It is when we are transferring figures to the income statement, we need to try to find out the additional information and adjustments if you have got anything that is affecting our rent income. But if you don't have anything affecting our item that we are looking at, we can take the figure as it is and put it in the income statement. So in this case, rent income, we can try to see additional information. We go to the next page to see anything that is telling us about rent income. But if you come to information G, you would see that this rent income was increased by 6% on 1 December 2018. The rate for June 2019 is still outstanding. So we are seeing that for June, it is still outstanding, which means we haven't received it. So it's income receivable. So we need to go at the beginning of the question, try to find out where is the year ending. Then we can see now how we can adjust that. We see that our year is ending on 30 June 2019. So and then the rent for June again is not received, which is the last month of the year. So it means we've got an accrual of income. So whenever we've got an accrual, you know that we add that amount. So we are going to calculate the rent for June, and then we add it to the figure for rent that we are given in the list of balances. So basically, but if you try to see, this rate was increased on 1 December, and the year is ending June 2019. So it means we want to count the number of months that are there after the increase. So the whole of December, January, February, March, April, May, and then June we didn't receive. So we're going to leave June. So it's saying 1, 2, 3, 4, 5, 6. So it's 6 months after the increase. So obviously, now since we didn't receive for June, this means we only have 11 months. So 11 minus 6, you're going to get 5 months are going to apply before it was increased. Remember, we are counting from July to the end of November. July, August, September, October, November. 1, 2, 3, 4, 5. So it's going to add up to 5. So we can now formulate a formula there that can lead us to find the rate for June, because we are not given the monthly rate there, but we can be able to find it. But also we take into account that the rate was increased when for these 6 months it had increased by 6%. So what I say, before it was increased, it was 100%. And when it was increased, we add our 6%, and it becomes 106%. So if you divide by 100 there, it becomes 1.06. So it's going to be times 1.0 times 1.06 the rate of when before it was increased. So let's just assume that the rate is R. Before it was increased, it was R. So to get the total rate, we can formulate a formula saying before it was increased, we had 5 months. So we are saying 5 times R. And then plus after it was increased, it was now 1.06 R. There becomes 1.06 R in their 6 months. So we are saying 6 times 1.06 R. That's how we can formulate this equation. And then the answer that you are going to get to be equal to the total rent that you are given in the list of balances representing the 11 months. We can come here, rent income, we're given this at 81,792. So we are saying here 81,792. So we can then solve this equation and be able to find R. When you find R, it will be rent before it was increased. Then we can add the answer we multiplied by 1.06 to represent after the increase. So basically what we are saying here is if you remove the brackets, it becomes 5R. It becomes 5R plus, if you say 6 times 1.06, we can just try to calculate it as such by saying 6 times 1.06. You are going to get your 6.36. So here we are saying 6.36 R equal to 81,792. So having that now, you can now add this side. Remember, these are like terms. You can add them, and then they become 11.36 R equal to 81,792. And then we can as well try to divide both sides by 11.36 so that we are left with R there. Making R sort of the formula there, divided by 11.36. So let's calculate it. As such, we're saying 81,792. And then we divide by 11.36. And then we are going to get your 7,200. So 7,200 now is the rent before it was increased. But for the month that we want is for June 2019, of which June 2019, it was already increased. So what we are going to do is we are going to say that before the increase, we multiply by 1.06 to indicate after the increase now, the monthly rent after the increase. So this one is the monthly rent before the increase. So basically we can say this one is the monthly rent before the increase. Then after the increase, now we are saying 7,200 times 1.06. Let's multiply, let's try to see. We are going to get 7,632. So here is the now after the increase, it was now 7,632. So this one is the one that is also going to apply for June, which was not yet received. So we are going to add it for the figure for the total rent that are given in the list of balance, which is 81,792. Get the total rent for the period. So we go to the other section and adjust as such. This is our other section. So we are saying the first item that we are having there is going to be our rent income. Rent income. And we are saying the rent given in the list of balances is 81,792. And then we add the one that was not yet received, 7,632. And then we get a total of 89,000. Get a total of 89,424. Then we can as well try to go back and find another income that we can put under that section. So we try to check again after rent income what else income we have? We've got commission income that we have here, which is 20,076. So we also go to additional information to try to find out if we have got anything that has to do with commission income that needs to be adjusted. Go item by item. And remember, you've gone through this information before you start to answer the question, so you can be able to locate quickly where we have that such an adjustment. So, but according to this video, we don't have anything that is affecting our commission income. So we can take 20,000 and 20,076 as it is and transfer it to the income statement. So we come here. So we are saying commission income. And the figure that we have is 20,076. Then after that, again, we check if you've got anything that has to do with income in the list of balances. And then we have got discount received 6,850 here. But also have to check in additional information if you've got anything to do with the discount received. We can try to go down, checking about that. But if you got information saying the bookkeeper here, the bookkeeper omitted a discount of 150,000 rands from July traders, a creditor. This was for early payment of the account. So we've got discount received that was omitted. So it wasn't added. So you need to add it to the balance that are given for discount received in the list of balances. So we add 150 to this figure, 6,850 to get the total. So you can go and adjust for that. So we put discount received. Then in brackets, you can just summarize the working whereby you say 6,850 plus 150. And then you get your answer is 7,000. So you can see that the spaces that we have for open income is are exhausted. So we can add them to get the total now 89,424 plus 20,076 plus 7,000. Then you get your total here, which is supposed to be let's try to add and see the total that we get there. 116,500. 116,500. So this is what we have. And then we are supposed to add other income to gross profit by saying 743,250 plus 160,500. And then we get the gross operating income here, which is supposed to be 859,750. So we do that, we go to the operating expense. We are supposed to put the total of operating expenses here, but we are supposed to list all the operating expenses beneath, and then we total will come here. So we've got already depreciation is pre-end at 71,680. Then we can go to our question to try to find out any other expense that we have that we can include under operating expenses. But obviously, we go to the nominal account section, which is here. To go down checking for all the expenses that we are given in the question. We've got salaries and wages here, which is 138,500. But obviously, we need to go through the additional information to see if we've got anything that is affecting our salaries and wages. We go item by item again. But if you go through, you see that we have nothing that is affecting our salaries and wages. So we're going to pick it as it is, 138,500. So we go down. So we are seeing our salaries and wages. Salaries and wages, and the amount that we are having is 138,500. And then after salaries and wages, we've got we can try to go back again to see the list of expenses that we are given. after salaries and wages, we are given as consumable stores. So consumable stores comes as part of our stock. So, the consumable stores that will be given in the list of balances here, like this one, 11,900, represents the total of consumable stores that was bought. So what we need to put in the income statement under operating expenses is the expense part of that consumable stores. And the expense part is the consumable stores that was used during the period. So we can only be able to find it when we go to the J formation and see if there are consumable stores that was left at the end of the period. So if we have them, we have to subtract them from total that was bought to, so that we remain with what was used, which is the expense. So we go to the J formation to see if we've got anything to do with consumable stores at the end of the period. Information B says stock taking reviewed the stock cost price 3,700 rands, and we're missing, and consumable stores on hand amounted to 2,900. So 2,900 represents consumable stores that was still on hand at the end of the period. So this one was not used out of 11,900 bought. So to get the one that was used, we're going to say what was bought 11,900, we subtract to what is remaining at the end of the period. Then we get the one that was used. Of course, if you subtract there, you get your 9,000. So we can just go and summarize that. So here we're saying our consumable stores. So we are saying for consumable stores, we are saying 11,900. And then we subtract your 2,900. And then the net figure that we are going to get is 9,000. That is going to represent consumable stores for period. But if you go back again, where we have the additional information for consumable stores, you would see that we also have something there that is also going to be part of our cost. If you come here, you would see that they are saying stock taking reviewed, so that stock cost price 6,600 were missing. So this figure represents trading stock deficit. Because they're saying this it's missing, it means it's a deficit. So basically, we are going to put that one again as trading stock deficit. So we can go down and put that expense as trading stock deficit. That one is already calculated, 3,600. So here we have trading stock deficit. Let's try to see. And the amount that we are having, say 3,600. So having that, now we can go back now to our list of balances and try to see what we have after consumable stores that we can include as an expense. So we identified consumable stores, we are here with insurance, which is 19,300. So for insurance, again, we go to extra information to try to check anything to do with insurance. But if you come to additional information, F, we are here. It reads insurance of 9,300 was fully recorded. The amount was paid for the period 1 May 2019 to 31 October 2019. So you see that this was the year that our financial year is ending. It ended in June 2019. So let's try to count the number of months that this insurance is covering. It's covering from the whole of May, June, July, August, September, October. That's end of October. That's when it's ending. So you've got 1, 2, 3, 4, 5, 6, 6 months. But our year is ending in June. Our year is ending in June. So we are saying the number of months that are outside our financial year. From June, we have got July, August, September, October. So we are saying July, August, September, and then October. 1, 2, 3, 4. So we've got 4 months outside our financial period. So we have to remove those 4 months. So to remove them, we are now just making a fraction of saying 4/6 times 9,300, which is for those 6 months. So we calculated as such. Now we are saying 9,300, and then we multiply by 4/6. Let's try to see. you will see that we're going to get 6,200. So it's going to be 6,200. So this 6,200 should be removed because it is for the months that are outside of financial year. So in other words, this is a prepayment that was done or a payment in advance. So we need to remove it from the figure for insurance that we are given in the list of balances. So you're just going to subtract 6,200 from the figure for insurance is you come here to that is 19,300 here. So as simple as that. As we calculate it, let's go to the other section. So we are now saying insurance. So for insurance, what we are saying is we are saying 19,300 minus 6,200. And then we get a net figure of 30,100. Right, so we can as well go and check on the next expense that we have after insurance. After insurance, we've got standard expenses, that is a balancing figure. We can leave it for now and put it at the end. And then we've got bad debts, which is 4,120. Right, we've got our bad debts. We can now check additional information if you've got any other bad debts that is going to increase that figure. Go to additional information. We've got D, which says in outstanding debts of 2,880 must be written off. So we are going to take into account that we've got additional bad debts that we have, which is 2,880. So we are going to add 2,880 to the figure for bad debt that we have, which is 4,120, representing our bad debt. So we can go to our answer section. So we are now seeing bad debts. So we are here, bad debts. And then the amount that we have is the amount that we have in the list of balances is 4,120. And then we add 2,880. And then the total figure that we are supposed to get is 7,000. Right, so this is what we have. And then we go and check again any other additional information, any other expense that we have. Remember, bad debt was the last one. So obviously, we can have some of the expenses that won't be listed in the list of balances. So we can as well go to additional information to try to see any additional expense not listed in the list of balances. Remember, we've got expenses like provision for bad debts and depreciation. They are expenses that are not included. They won't be included in the list of balance, but you can only find about them when you go to additional information. So if you go to the last additional information, saying depreciation for the year amounted to 71,680. So we've got depreciation. We've got depreciation. In depreciation, we said it's pre-ended, so this one we can leave it. Then we can check now for provision for bad debts. So if you go to information E, it's saying here, provision for bad debts must be adjusted to 5% of debtors. But this 5% of debtors, we know that we have got an additional 2,880, which was not adjusted, 2,880, which was not adjusted, which we need to subtract from the total of debtors that were given in the list of balances. So remember, when these balances were calculated, these bad debts that were having in the list of balances, 4,120, were already subtracted from the list of we are already written off. So they were already subtracted from total of debtors. So the debtors control figure that we have here, which is this one, it had already been adjusted for 4,120. But the one that we have in additional information needs to be subtracted because it was omitted. So we are saying, first of all, we subtract the one in additional information from this one, which is, we are going to say now, 68,880. 68,880. We are saying 68,880 we subtract 2,808 to get the net figure for debtors, which is going to be, let's try to calculate it, 68,880, and then we subtract 880, which is 2,880, we're going to get 66,000. We are going to get your 66,000 here. So these are the debtors after we've removed these ones, the bad debts that was further written off. So we now say 5% of this figure. Then we say now 5%, which is 5/100. And then we multiply by 66,000 to get, let's try to see what we get. We get your 3,300. 3,300. So this is the level of provision for bad debts for the current period. And then we check now where it was for the previous year. We're given it in the list of balances. Provision for bad debts. The previous year it was 2019. So 2019, it was 2010. We have it here. Provision for bad debts was 2010. So we come here. So basically what we are saying was 2010. So what we are saying is a movement from 2010 to 3,300. So we are seeing that's an increase. And when it's an increase, it's a what? It's an expense. But if it's a decrease, it becomes income, and we are supposed to put it under other income. So in this case, we calculate the magnitude or the size of the increase. We are saying 3,300 minus 2010. And then we are going to get you 1,290. So this is exactly what we are going to summarize as provision for bad debts. Provision for bad debts adjustment. We can just come in. And we are saying provision for bad debts. Obviously, in brackets, we are going to show it as 3,300 minus 2010. And then the answer that we are getting is 1,290. So lastly, we've got that sundry expenses. That is a question mark. So you can just refer back to it and try to see that it's just listed in the list of balances, and then there's a question mark. And when it's a question mark, we know that we are supposed to find it as a balancing figure if we are not having any hint in terms of how to get it. So in this case, our sundry expenses here is indicated as a question mark. So obviously we need to find it as a balancing figure. So but then if you go to additional information, let's try to see. Additional information says I is going to lead us to find that figure. Is saying operating expenses amounted to 24% of the adjusted sales for the year. So adjusted sales is the sales after we have effected the adjustment that is in the additional information. Remember, we did an adjustment for sales by adjusting for this figure for 3,500. So the net figure that we got is now the adjusted. So we are saying that figure we are going to multiply it by 24%, as indicated here. So the other that you get becomes the total operating expenses figure. So we go to our answer section. We are saying for operating expenses, we are here. If total figure that is supposed to come here, we are going to say 24% as a decimal, it's 0.24. And then we multiply by the adjusted sales figure. And the adjusted sales figure is this one that we have put here after making the adjustment, which is 1,734,250. So we are going to multiply it by 1,734,250. So that we get the total for expenses here. We calculate it, you see that the answer that we are supposed to get is 416,220. So this is the figure for operating expenses. And then after finding the figure for operating expenses, you are supposed to find the figure for sundry expenses now. So how can we find it? We can add all what we have there, starting from depreciation down to provision for bad debt. So you see that if you add from here to here, the total figure that you are supposed to get there is supposed to be 244,170. Then getting this figure now, you subtract it from the total that we have for operating expenses, which is 416,220. Then we make a subtraction there. You see that the net figure that we are supposed to get representing our sundry expenses is going to be 172,000. 172,050, representing our sundry expense. So here we are saying the figure that we have is 172,050. So it means we have found our sundry expenses as a balancing figure. So having done that, now we can now go to our operating profit, try to find what is the figure for operating profit. But to find profit, to say gross operating income minus operating expenses. So we can put this one in brackets. We'll subtract here. The answer that we are supposed to get here as our operating profit is going to be 443,530. Then from there, obviously, we go to the section where we are now supposed to enter our interest. We have got our interest income. Check if we've got our interest income in the question. Obviously, after operating profit, you need to check if you've got interest income in the question. So let's try to see in the question if we have our interest income, which is obviously interest on fixed deposit. So if you come here, you would see that we check for that. Check if you've got fixed deposit. You see that there's a fixed deposit that we have there, which is 100. Fixed deposit is here, it's 160,000. And then we check again in the transformation if you've got anything to do with fixed deposit or interest income. You see, we are not seeing anything that has to do with our interest income. And then also, if you have got anything to do with interest again, under the account section, we are given interest on fixed deposit is 8,500. But this interest just represents the interest that was received. It doesn't represent the interest that was supposed to be received for the period. The interest which is supposed to be received for the period, we get it from the percentage that we are given there, which is 9% per annum. So we are going to say 9/100. And then we multiply by the fixed deposit that we are having, 160,000 over 1. So we try to calculate it as such. 0.09 is a decimal 9%. And then we calculate multiply by 160,000. You get your 14,400. So the interest that was supposed to be received for the period is 14,400. But what was received is only 8,500 here. So it means the other part was in accrual or owing. So we can subtract that, find the size or the magnitude of the owing. So we say 14,400 minus 8,500, and there you're going to get your 5,900. So as you present it now in the income statement, we are going to say 8,500 that was received plus what was still owing, which is 5,900. And we arrive at 14,400 for the period. So 8,500. So what we are saying is we are going to say our 8,500 And then we add our 5,900. And then the answer that we are supposed to get is 14,400, which is representing for the period. So we can just go there. We can just go there and summarize the search under interest income. Interest income is here. So we are saying 8,500. What was received plus what was TOE, 5,900. To get the interest income for the period, which is 14,400. Then we add it to 443,530. 143,530, and then we add 14,400. And then you're going to get 457,930. 457,930. And this becomes profit before interest expense. So we need also interest expense here. So we go to Excel information. That's where we have the information about in calculation of interest expense. We come here, we see that we are given the loan balance at the beginning and at the end, and we are given the repayment of loan including interest. So calculating the formula that we use is balance at the beginning. We add interest capitalized, we subtract repayments, and then we get the balance. We get the balance at the end. So here you are supposed to get your balance at the end. So the figure that we want is this one. So we are saying, to make it subject to the formula, we are saying balance at the end. We subtract balance at the beginning. We take this one to the other side, it becomes negative. We take this one to the other side, it becomes this one is the one that we are making subject to the formula. We take a negative repayments to the other side, it becomes positive repayments. So basically we are saying balance at the end is 257,250. We subtract balance at the beginning, 375,000. Then we add our repayments, which we are having as 161,250. So we add it like this. The figure that we are supposed to get becomes your interest. So we're saying 257,250. We subtract 375,000. Add 161,250. And we are going to get your 43,500. So 43,500 becomes your interest expense. So we can just go there and put it as 43,500. So here we are now saying interest expense. So the figure that we got was 43,000, sorry, 43,500. And we subtract it from the figure for profit before interest expense, which is 457,930. And the answer that we are supposed to get is 414,430. So this becomes your final answer as net profit for the year. So this is what we have, guys, on the preparation of the income statements on this question paper. Let's stay tuned for more videos to come. Let's subscribe and share. Let's share the link to our friends who are doing grade 11 accounting. As for this video, and out, we meet again in the next video.